Have you ever been asked the question, are you a conservative, moderate, or an aggressive investor? What a horrible question to ask. To put everyone into three generic categories. There are more categories of hair color than there are about financial risk. And the reason why it's such a bad question is that it doesn't properly define you and what your thresholds are. If you were to ask your own spouse what their definition of moderate investor is, it's very probable that it's different than yours. And that's your own spouse. And because your risk hasn't been properly defined by these three generic categories that we run into, you have anxiety when we have volatile markets. Let's go back in time and let's say that you met with a financial planner back in 2005 and you were asked this question: are you a conservative, moderate, or an aggressive investor? And you tell your financial planner that you're a moderate investor. You're willing to take on some risk to get a better upside potential, but not prepared to lose a large percentage of your portfolio. So in 2005 comes along and you're very happy with your portfolio. 2006, 2007, same story. And then guess what happens in 2008? The markets have a correction, where at one point, they were actually down over 50%. So you start opening up your statements every single month, and you open up that first statement and your portfolio's down. And the next month, your portfolio's down more, and so on and so forth, to a certain point where you're probably having some anxiety and you're starting to lose a little bit of sleep. So you get your financial advisor on the phone and you tell him or her that you know these losses are only on paper, but how much more is my portfolio gonna lose? Well, at this point, you're most likely going to get your standard line from the financial advisor. Don't worry, it's going to come back. What a cavalier thing to say about somebody else's money, by the way. See, this situation, it only happens when your risk tolerance has not been properly defined. So how do we make sure that that never happens to you? We use a risk tolerance program that was developed by a man that won a Nobel Prize on behavioral economics, which is the study of why people do what they do with their own money. And instead of having three generic risk tolerances, we have 99 different risk tolerances so that we can truly customize your portfolio to you and your personal risk tolerance. So if your current portfolio is invested based on that horrible question and you want to see if those numbers truly line up to where you really are at, give us a call today and get a complimentary portfolio risk review at 512-275-6180.